Universal Title has got 21 offices in DC, Maryland, and Virginia. So we can take care of your clients from Richmond to Baltimore. So yeah, I've been with the company for 8 years. Oh, there's Nicole back. And Universal Title has been around, the Mason law firm started like over 40 years ago. So definitely have a lot of real estate knowledge. We have an attorney in every office. So yep, super excited.
Fantastic. So now I guess we'll get started with Tim. Tim, thank you for joining us today. You're always fabulous to hear from. You keep everyone entertained. So I'm looking forward to your great class.
You know, I feel kind of bad because I always give out scratch offs, and I was like, oh, I can't give out scratch offs to anybody today. So I'm a little catch-22 there. But we're going to go ahead and get started. I've got a PowerPoint that I want to share with everybody. Can everybody see the PowerPoint, how to win the financing game?
Yes.
Excellent. Okay, good. So a lot of my agents have come to me and they said, you know, today's market, it's crazy out there. I mean, you know, there's no inventory, less than really a month, if you will, limited sellers, unstable economy. We don't know what's going on. A lot of lender guidelines have changed. Interest rates. I mean, I quoted somebody the other day on a 30-year fixed rate at 2.5%, no points. And it blew my mind because my first rate was 18% back in 1984. So aging myself there a little bit, but a lot of massive changes. And of course, real estate, you know, has gone techno. I mean, everything is just kind of wild to watch. And most of my agents are telling me, they're saying it's literally a war. It's a battle out there. And everybody's battling. I know, Sherry, we were just talking about this. You know, everybody's zoomed out. You know, we have technology just popping out there. You know, we've got so many different agents that we don't see anymore. We've got auctions. We got sellers that are trying to sell houses themselves. So there's so many different challenges. And so in this marketplace today, we're seeing multiple contracts. We're seeing a lot of value issues on appraisals. Most importantly, the biggest one I see right now is really cash to close. So I want to teach you just really briefly about the market and really how to win right now. How do you seize the opportunity to make sure that every contract that you present is going to be a winner? So I want to kind of nail down just a couple real briefly what's happening and what we're seeing and kind of give you a little bit of an idea as far as how to go in and really just take advantage of the marketplace itself. First, as far as rates, everybody says what's going on. We're actually projecting that interest rates will stay relatively low where they are throughout, ready for this one, all the way into next spring. Everybody's worried about interest rates popping up after the election, but we don't believe that's going to occur at all until the spring session of the new political arena. We won't know really what's going to occur at that point in time. If taxes seem to be rising, then that may be an illustration. If the economy is in a recovery stage, then those are the kind of things that will push up the interest rates. But there really is no reason for interest rates to change at all right now. So from a knowledge standpoint, you've got to let your clients know, A, do we expect them to change? Yes. B, is it unknown? Most definitely, we don't really have a solid idea, but we want to get clients to take advantage as fast as possible of the current marketplace and what's out there. So we want to be knowledgeable, prepared, aggressive. And I tell my agents, you've got to be unstoppable in today's marketplace. So agents' objectives, what do they got to do? They got to know their options. They got to maximize their buying power. But more importantly, you need to know how to work around the lending guidelines. We need to see what's happening in the marketplace, especially with the new grant programs that are out there when you're finding a tough time on cash or trying to push a client's ratios way up there to where they were before, or really maximizing ready cash. How do we overcome these obstacles? And I want to kind of guide you really quickly on a couple things. And I'll hit on each one of these little sectors, but I'm going to tell you a really funny story. Right now is the best time you can ever go in and dispute credit items. And people don't realize this, but the credit bureaus themselves are overwhelmed because everybody's sitting at home and they're looking at the computer saying, well, let me work on my credit, let me get things together. So right now they're having challenges in responding fast enough. And we know that some of the laws, some of the rules say that, hey, you've got to respond within my disputes and my investigation within 30 days. So we're seeing a lot of credit repair, a lot of credit update. And what's one of the things one of my agents are doing right now is they're coaching their clients through that credit cycle, if you will, and showing them how to overcome. But I wanted to kind of show you just like just a brief analysis of what's out there so that you guys are well prepared. Because you'll hear a lot of lenders saying, oh, we can't do conventional loans below 680. No, they're available. 640 is still there. And I want you to see it's 640. It's up to the county limits. You know, it's a 50 back ratio, if you will. FHA seems to be 640, seems to be the magic number with a straight 640 loan. But the beauty of FHA is it'll push you to that 55 back ratio. Now look at VA, and everybody says, you know, VA, is it really applicable? Well, VA, the cool thing is, really has no county limit. And I bring that out because I recently did 2 large VA loans, one in the Eastern Shore and one in Fredericksburg. The one in Fredericksburg was over $900,000 VA. And what was fun is 2 other lenders turned them down because their credit score was a 645. So we've got to ask these really strong, important questions, especially on a VA standpoint, because they bought 900,000 VA over there, and Eastern Shore was 1.3 million. So we got to know some of the product knowledge, if you will. And USDA has come out just super strong from an opportunity. The biggest thing about USDA, of course, is that you're able to finance closing costs and repairs. And that's been an answer to a lot of clients where either A, there's not enough closing, or B, there are repairs that need to be accommodated. But the most important news is VHDA dropped their scores down to a 620, which actually just came out the other day. So VHDA is back in, that's 620 for conventional, that's 620 for FHA, 620 for VA, 620 for USDA. So we've got another tool in our arsenal, in our belt. So in this marketplace, having that knowledge of, okay, what products can I go after? You know, what is my flexibility of what I can do? And where do I find really the cash to make these happen? Well, VHDA by far is that amazing opportunity, if you will, with the grants, with the down payment assistance, et cetera. So let's talk about credit just real briefly. We talked about credit as far as a lot of credit disputes going on, a lot of credit investigations going on. This is by far the best time. And the reason I tell you that is because the loan programs are being pushed hard. We tell people from a conventional standpoint, we can do 640, but we recommend 680 because the mortgage insurance is just so, impactful to us, so expensive when you get into the lower FICO scores. We talk about lender credit options, and that's something that the lenders don't talk about, but people don't realize rates are so low. You might be on an FHA loan at 2.5 with 0 points, and then turn it around and be able to do a 3.25 and get back 1 or 2% in lender credit, so that you can make that contract work. Because let's face it, when you're out there competing, you're writing a contract, we know we're probably pushing the envelope when it comes to the sale price. We're pushing the envelope when it comes to appraised value, and we're probably not asking for a lot of closing help. Well, this is one of the ways of jumping in and finding cash, pulling it out off of the vine, if you will, be able to jump in and use that as an opportunity. So you need to have all of those strategies in mind. I wanted just to kind of bring in what's changed on the income side. We've got COVID-19, and unfortunately, the current prediction is we won't see much of a change until next summer. So with that in mind, we've got to be able to go in and take a look at what's happening in the marketplace. Well, under the self-employed scenario, what we need now, if you're self-employed and you're in COVID, your operation may be closed. You may not be out there right now hitting it hard. Well, the cool thing about the self-employed side is we can do loans to folks who are self-employed. They're basically going to ask for bank statements for the last 2 months of this year, and then turn it around and look at 2 months from the previous year. As far as investment and rentals, the reserves are jacked up a little bit, so we got to watch out for our reserves. We're still hitting on the commission and the tip income. One of the things that people forget, FHA only requires 1 year commission income. So it's a real advantage if you've got a client who possibly they've only been commissioned for a year, they're a little bit challenged with the current marketplace, and they're able to use that commission income to be able to make it work from that standpoint. Now, maximum qualifications. Reserves really make or break a deal right now. Most people don't realize that, but reserves are that possibility of being able to stretch a ratio, stretch your USDA buying power, stretch your FHA loans. There are so many things you can do. And you've just got to be able to understand that building those reserves, building that cash is really critical. So one of the things that my agents are asking about right now in our marketplace is, how do we handle repairs? And I always want to bring that up. First of all loan types allow you to set aside a small escrow, and small can be $5,000, it can be $10,000, depends upon the situation and circumstances, to have repairs done after closing. So if you've got a client or a situation where, let's face it, with a limited inventory, you've got a house out there that needs some tender loving care, you've won the bid, come to find out the HVAC system doesn't work, the seller doesn't have the cash to make the repairs, but can do it after the fact, we now are able to do that with USDA, VA, FHA, and conventional. So the guidelines have opened up to be able to do repairs after closing within 7 days of closing with a final inspection. Most people also don't realize that USDA, if the house were to appraise for more, you're actually able to roll in the cost of repairs. Now, if you get snagged, a lot of agents are turning and saying, what do we do when we have a situation where the repairs are more extensive? And there we want to turn it into either an FHA 203K, home style rehab loan, or maybe even a conventional rehab loan. And believe it or not, they're still out there. They're just tighter on the ratios. So I always tell people, and tighter on the FICO scores. So watch your numbers carefully, because they are, in some cases, expensive options. Now, let's talk about appraisals. On a lending standpoint, we're seeing a lot of challenges on appraisals. And the biggest challenge we see of all, of course, is making sure that we have the comparables to support the house, making sure, number one, number two, more importantly, that if you have repairs and you know of them and that you can demonstrate them, what you want to do is take those repairs and make the appraiser aware of, hey, this is my repairs. B, this is how much that repair is going to cost me to complete. And the reason why you want to be proactive on repairs on an appraisal is quite simple as this. If you don't tell the appraiser that it's going to be $1,500 to fix the HVAC system, the appraiser may go in and say it's $6,500. Or if it's only going to cost you $100 to fix the screen door, and the appraiser puts in $500, we have to rely on what the appraiser puts out there. So we want you to be progressive, proactive, if you will, on providing comparables. The appraisers are begging for comparables, number one, from a listing side. Number two, they're asking you to provide them with any information that you need. Now, one of the things that you need to know too is that we don't always need an appraisal. We're getting a lot of appraisal waivers, and your clients need to be aware of this. If they're putting down 20% and it's in an area that has a lot of activity, you may get what's called an appraisal waiver. That means we don't even need the appraisal, or on a FHA or VA or a conventional loan, you might actually get what's either an exterior or desktop appraisal. That means the appraiser is never going to come to the house. Now that occurs specifically when the house is occupied. If the house is vacant, then what's going to occur is the appraiser is required to go into the house. So I tell my agents, look, if the house is occupied and you're concerned about the enhancements, the improvements that are in that house that are going to make your value, provide that list to your lender. Be proactive. Say, hey, listen, I want to let you know it's got radiant floors. I want to let you know that the kitchen is brand spanking new and here are pictures. I want to let you know that they have put in whatever the amazing amenities that have been placed into the house. You want to let them know that all these things have occurred. Because what that's going to do is help enhance your value. Because if the appraiser is not required to go into the house, what's going to happen in essence is that you're not going to get full value. So we want to jump in on the appraisal side. So provide the comps, provide the repairs, and most importantly, provide the enhancements. The last thing I always tell my clients is this: don't forget, on a VA loan, if the house does appraise for more, the seller is allowed to pay off a veteran's debt. We've actually still had that happen a couple of times, and it's allowed clients to get in to be able to qualify for a house or make the loan work much more effectively. Now, credit repair. We're seeing a tremendous amount of credit repair right now. And this is where my agents are winning big time, because a lot of agents are saying, I don't have as many buyers in the works. And my point to the clients are, yes, you as an agent do. We just got to take these very motivated clients who may not have the score just yet and guide them along. So you can actually get your lender to provide a plan. You can actually get your lender to provide the input that you need and the guidance. And I find that when you have an agent on one side and the lender on the other, working and coaching your clients, you can get some scores. And it's kind of fun. I pulled out this morning a class that I'm teaching this afternoon. I was telling Lauren, I've got a couple of classes. And this was a client that we literally just did the other day, and their middle score was a 578. And we pulled this in the spring. And what's kind of wild is here it is July, the new score is a 667. So my point is that right now is the time to attack and destroy, the credit, to dispute those errors, to help get corrections put into place, because the results are really coming in strong. Now, this is really good. The Federal Home Loan Bank still has grant money. And this is an area that a lot of lenders miss because they don't have it as a program. If your mortgage company is not located or doesn't have a central bank that's affiliated with the Federal Home Loan Bank of Atlanta, they're not going to have grants available. And these particular grants are actually money that's forgiven over 5 years. There are 4 of them. And I want you to see this because this is where a lot of my agents are winning. Here, I'm not bumping the rate to get lender credit. I'm not using a VHDA program. I'm jumping in and actually getting my clients $5,000 for first-time home buyers, $7,500 for community partners. That's been a big one. Law enforcement, medical, first responders, education partners. It can be the janitor that works in the school, are all eligible for a $7,500 grant. And this money, ready, only has an income limit. So, and the income limits are fairly aggressive. They match the 80% of the HUD median income. So here you can you can go out and advertise to your police departments, to your nursing homes, to your hospitals, to your school systems. I would go to your fire departments. I would go to your EMTs. You can provide a $7,500 grant with a partnership with a lender, and it requires a $1,000 contribution. In addition, veterans that are buying a house, it doesn't matter. And this is kind of cool. The community partners, you don't have to be a first-time home buyer. You can actually sell a house at 11 and use this program and buy at 12. So it's a great opportunity. No first-time home buyer requirement on that program. Now the Veterans Home Buyer Program, you don't have to be a first-time home buyer. $7,500, again, another grant. Remember, biggest challenge right now for agents, lack of closing help, lack of cash. Here's your solution. So here's $7,500 that can be used, ready? And all they've got to do is been a vet. Again, you don't have to be a first-time home buyer. Again, you can sell a house at 10 and buy a house at 11, okay? So a great opportunity. Only own one house at a time, but an opportunity so far. And the last one is the Overseas Vet Program, which is $10,000 on top of any other grant or program that you're using at this point in time, down payment assistance. Now, the $10,000 are for veterans that have served in some kind of overseas, I won't call it conflict. For example, if they're over there during the Gulf War, if they were over there during some kind of a conflict with the Middle East. I had a client literally last month closed with $10,000, and he used that with another program. So when you see the bottom where it says open to all loan programs, you can actually take, and this is kind of wild, that $10,000 grant, for example, and you can add it to a VHDA loan with the plus. So you can do a VHDA loan, get down payment assistance with VHDA, and turn around and use a $10,000 grant on top of it. So there's a lot of money out there, but a lot of lenders are not talking about it. Either A, they don't offer it, or B, it's too many layers they don't want to deal with. Now, talking about layers, these programs do take about 45 days. So we've got to allow enough time to process through. But when you are the, I don't know if we call it the hero, if you will, providing phenomenal grant programs to the heroes out there, this is just a home run. It really is. So let's talk about what you need to do in this marketplace. You've got to be aggressive, okay? And I will stop you right there. Everybody says, oh, you don't want to push the debt to income ratios. And the answer is yes, you do. You want to make sure your lender is running the loan. This is the most important part. You've got to ask every one of your lenders, when you get an approval letter, find out, does it say it's been run through DU, which is Fannie Mae's underwriting system? Has it been through Freddie Mac, LP, which is Freddie Mac's underwriting system? Has it been run through GUS, which is the USDA's underwriting system? You want to make sure that they're pushing the ratios, but still getting an underwriting approval for your clients. It is so imperative. It's so on top of the game. You want to jump in and make sure you're being aggressive, because in this marketplace, you can't be the low man on the totem pole. You've got to be the most aggressive. So we can push debt to income ratios. We want to prep our clients ahead of time. And by doing so, it's finding that cash to close options, right? Again, cash to close, the Federal Home Loan Bank, the VHDA programs, jumping in and talking about using lender credit, jumping and talking about if the house were appraised, using the appraisal to upcharge the closing out, maybe rolling in repairs, rolling in closing costs. Or more importantly, most clients don't realize they can tap into a 401k, TSP, and IRAs. That may be an option for you as well. We want to overcome property conditions right now. We want to jump in and we want to hit hard and realize if you have an issue with a property, it doesn't mean it's the end of the world. Because we recognize there are limited properties out there. I saw in a report the other day that said in the United States, there is less than 1.8 months of inventory. That's US. And I know that in certain marketplaces, it's a month. I mean, you put a house on the market on a Thursday, and by Friday, you've got 12 offers. I mean, I don't know about you, but I've had clients actually write on homes sight unseen and base their decision on the home inspection. So overcoming property conditions does not have to be a hurdle as long as we address them. And you address them through either setting aside escrow for repairs. Like I said, all programs allow it, number one. Number two, we jump in and instead we use some kind of rehab product if that's what we need to do. Or number three, more importantly, we negotiate a resolution that attaches possibly just the larger items. And one of the things that I have recommended to my agents is to make sure you're utilizing home warranties. I got a client that closed and the HVAC system was a bit questionable. And what they were able to do is they went in, got a home warranty, and the HVAC system failed about 60 days later. Well, home run. They were able to use that home warranty to offset a repair or an anticipated item that may have had some challenges in the future. So just kind of don't let property conditions get you. I want to just briefly tell you what's changed in the condo world. So we've definitely now have more condo options, still primarily conventional, but there is an opportunity now to do one-time pops on FHA, and it can be done. Most clients go conventional though because the restrictions are a lot less limited. We've actually been able to minimize some of the student loan debt, and some of the programs now allow us to waive it, as in not count it completely, and that's called income-based on a conventional loan, okay? And we've also been really coaching our agents to focus on being aggressive by reaching out to the listing agent. Now, I don't mean the agent reaching out, the buyer's agent reaching out to the listing agent. I'm talking about getting that lender out there and pushing that lender to make that call and say, hey, Judith, I want to let you know, the Smiths are running a contract with Sherry. Everything looks phenomenal. And I want to let you know that we've already run the client through. They've got high 700 credit scores. I've got a DU approval. I've got the bank statements, the pay stubs. That's been a home run. And it's actually overcome a lot of clients that overall couldn't otherwise have won that house because they're looking around. One of the things that I will tell you, make sure your lender is using local appraisers as well. That's been, that was a recent deal where we won a loan because it was we will call it a firm out in Texas that was the lender, and they weren't willing to accept that offer because they couldn't control the appraisal process. Make sure your lender is using local appraisers, using local talent that understands, hey, this is a house, historic home in Fredericksburg. It's going to be comparing quite differently. Or this is a house in Orange County that may have some different twists and turns because it's in a rural area. So these are kind of things you want to kind of approach as well. And ultimately, you want to become that expert. And so today I wanted to kind of just give you an idea. What's happening to the marketplace? Interest rates are phenomenal. and should stay relatively strong, should stay relatively low for the next couple of months. We do know that the political arena, it could twist things around. So we don't know how that outcome is going to occur. Number one. Number two, we know that credit repair is hot and we're seeing a lot of results. Number three, don't let appraisals or property conditions knock you out. Number four, make sure your lender is running those automated systems and giving you a true pre-approval, not a pre-qualification, if you will. And number five, I need the agents really to be the experts, because sometimes the lenders aren't always as aggressive, if you will, on the marketplaces. I always throw in the 7 secrets of savings as well, because a lot of clients come in and say, oh, I don't have any time, I don't have any money. And I tell people, look, second jobs is to go out there. You can be creative, you can sell something, you know, you can jump in, you can file exempt on your taxes. I laugh, I had a client recently move in with their parents, and then after being there for 60 days, they asked their parents for gift money, and the parents said, yeah, because they wanted to boot them out. I mean, it was the mom and the dad and the 2 little kids, and the parents didn't realize it's insane out there when you have 2 little ones and you haven't had little ones around for a while. We talked about the 401k and the IRAs, TSPs. You know, they recently changed the law where you can actually increase your contribution. You can take up to 100% of what you have in a 401k or a TSP, so that's available. And I always tell people, look at your rent deposits as well. Make sure we're looking at every little angle when it comes to cash. So, in summary, it's critical out there. You've got to set a plan. Every client, okay, are extremely highly motivated, but you've got to constantly coach them. You've got to be out there. You've got to say, let's go team. You've got to focus on the credit. You've got to focus on the savings. You've got to focus on the cash. You got to focus on the job situation, okay? You got to get them committed, okay? And I tell all my agents, look, narrow down your options, set realistic timelines, but really coach them through the finish line. So with that in mind, I always throw these in. We got a boatload of Zoom classes because, as Lauren knows, and I love Lauren and Farr, they're constantly out there. And I throw the last one in. If you have questions or you want this PowerPoint just for fun, you know, email me. It's probably the easiest, to be honest with you. I'm more than happy to send it to you. Or if you have any questions about any of the programs that are out there, but there are so many opportunities. There is so much business out there. You know, make sure your lenders are calling you back. Make sure you're asking them about the grant programs. Make sure you're asking them about VHDA. Make sure you're asking them about lender credit. Make sure you're asking them, how do I set up an escrow for the repairs? Make sure you're asking them, is there any way to get additional support? Make sure you're asking them, is there any way to increase the debt to income ratios? Because you've got to be aggressive in this marketplace. You know, a lot of lenders are overwhelmed with refis and they're not focusing on their primary clients, which are you, the agent. So as always, hopefully I didn't give you too much. I try to pound in 3 hours in about 30 minutes just to kind of give you guys a lot of ideas. And Lauren, Farr, as always, you guys do a phenomenal job. And I just want to thank you. Are there any quick questions at all?
Hey, Tim, so we do have a question in the chat. With the 401k option, is it only for their first home?
Great question. The answer is no. You can use your 401k multiple times. Now, there are limits to the number of loans that you can take on a 401k or a TSP. You've got to touch base with the provider, the servicer of the 401k TSP. Like thrift savings plan, you can take a regular house loan, okay? And that one's a long-term spread, and it's cool. And then number two, you can take a hardship loan as well. So you don't have to be a first-time user of your first-time home buyer, number one. And then number two, this is kind of wild, you can use it for hardship to pay off debt to qualify, or number three, you use it to buy a house. Now, one important thing that most clients ask, and they forget this, that debt does not count in their debt to income ratio. So it's really cool how you can kind of use that to spread things out a little bit more. But great question. Anything else? Well, Lauren, if you have more questions, I'm here for you guys. I'm going to go ahead and dismantle my screen, if you will. Here, I think stop sharing.
That's some great information, Tim. Seriously. Yeah, and one of the agents over here is saying like this class should be just as mandatory as ethics for new agents, and I agree with that. I mean, there's just not, we don't, we all stay in our lane, agents do what agents do. I do what a title company does, but just knowing some of this information and knowing who to point someone to.
Well, exactly. And I think that's the key, Sherry. You nailed it right there. And Sherry, I think you nailed it all the way down. You ready? We have to be a team, don't we?
Yes.
Have Sherry, our title, in place, right? We've got to have our appraiser in place. We've got to have FAR backing us up if we have challenges or issues or need educational pieces. And then you've got your lender piece. So it's a full circle. You've got to have that team effort to win in this game right now.
Yeah. Awesome. Yep. I'm emailing you right now so I can get a copy of this. It's great.
No problem. Well, thank you all, Lauren. Thank you.
Thank you, Tim. And we'll send out the recording later today, so you'll have that at your fingertips also. Thank you, everyone. Have a great day and a great weekend, and we'll see you guys.
Awesome. Happy Friday.
Exactly. Bye, guys.
Bye.
Bye, everyone.
Bye. Thanks for joining us. We appreciate it.
Thanks, Lauren.
Welcome. Bye.